I'm an extremely stable genius.
He said one nice thing about me. He said I'm a genius.
I am the chosen one. Somebody had to do it. So I'm taking on China. I'm taking on China on trade. And you know what? We're winning.
$37 trillion. That is the entire federal debt owed by the United States government, which is more than the economies of Europe, Africa, and the rest of the Americas combined. This is increasingly becoming a huge problem. Since World War II, the USA has had the most stable economy in the world. Almost every country, be they friend or foe, invested in the USA, whether it be stocks or bonds or even fine wine. Almost every investor, from your average Joes to the CEOs of hedge funds to central banks all around the world, hold investments in the USA. As a result, the world economy has become so connected with the USA, so much so that a wise man once said, "When America sneezes, the world catches a cold." The entire system has been built on confidence. But what if this confidence goes away? What happens if people stop buying U.S. debt? Since the financial crisis in 2008, U.S. federal debt has more than tripled. In fact, the U.S. government must pay more than $1 trillion a year alone just to cover its interest. This accounts for almost 20% of all its annual tax income. Annual interest payments have even surpassed the USA's defense budget. Year after year, president after president, this debt keeps soaring. More and more people are questioning the possibility of a U.S. debt default, especially thanks to Donald Trump's return to the White House. Trump's stupid tariffs have already thrown global markets into chaos and caused a 0.2% decrease in U.S. GDP in the first quarter of 2025. On top of that, Trump's trade wars and annexation talks of Canada are alienating allies and friends of the U.S. all around the world. Trump even has a history of declaring bankruptcy within his own business empire.
I mean, I was a businessman doing business.
Trump's unpredictable character is eroding confidence in the United States. America is no longer the safe haven for investors it once was. If this debt crisis gets out of control, it won't just affect Americans, but it will destroy the entire world economy. America's position as the global hegemon and world's leading economy is no longer secure. If I had said that 10 years ago, you would have laughed at me to the bottom of Death Valley. Historically, U.S. government bonds have been the safest investment known to man. This is thanks to high levels of trust and confidence. Investors were always sure that they would be paid back. The chance that the U.S. government may miss a payment was unthinkable. Countries like China, Japan, and the U.K. hold more than $2.5 trillion in U.S. government bonds. Nowadays, America is more known for its wasteful spending and debt. Normally, in times of economic uncertainty, investors would rush in and buy up as many U.S. bonds as they could, but not this time. Recently, investors have been retreating from the U.S. Treasury bond market over fears of rising U.S. debt and the fallout of Trump's trade wars. Diversifying away from America is now on the agenda for investors in countries alike. China, once the world's largest holder of U.S. debt, has sold off more than $340 billion worth of U.S. bonds since 2021. Japan, the world's second biggest holder, has sold around $200 billion. Even close U.S. allies like the U.K., Canada, and Germany are beginning to sell. The once rock-solid trust in U.S. bonds has clearly been greatly shaken. If confidence in U.S. bonds fall further, it could trigger mass panic. This panic may spiral out of control and lead to a worldwide sell-off, which would crash the U.S. dollar, leading to trade turmoil and an inflation crisis. To shore up confidence, the U.S. Treasury have begun offering higher interest yields on its bonds. However, this is only a short-term fix. The U.S. government spends around $3 billion every day just on interest payments. This money could be used in so many other ways, such as building infrastructure or providing better welfare to American citizens, especially low-income households. 1 in every 5 tax dollars go towards these interest payments, and this burden just keeps increasing. So what would happen if this bond sell-off continues? This takes us back to the foundation of economics. Say it with me. Supply and demand. As more bonds are sold, the supply of U.S. dollars increase. Thus, the value of the dollar falls. This will set off a huge inflationary crisis. The U.S. is a huge importer, importing around $4 trillion worth of goods and services annually, with a trade deficit of around $140 billion. A fall in the value of the dollar makes these imports much more expensive. Things like computers, cars, and furniture will become much more unaffordable. Moreover, 15% of the USA's food supply is imported. Necessities like petrol, or as the Americans say, gas and groceries will be affected. This means many struggling families will be worse off as inflation eats into their paychecks and savings. To make things worse, the average American holds around $3,400 in credit card debt. A bond sell-off and high inflation means higher interest rates, making the debt problem even worse. Total credit card debt in the USA stands around $1.2 trillion, a 54% increase since 2021. Many families may end up stuck in a debt trap for years. All this leads to fall in spending, hurting business profits and government tax revenue, which leads on to a recession or perhaps even a depression. A fall in trust of the dollar can cause currency crises all around the world. Most of world trade is conducted with US dollars. Almost every country uses the dollar to secure their own. As a result, hyperinflation in the USA will cause hyperinflation across the globe. Many countries, especially BRICS nations like China, are calling for a shift away from the dollar as the world's currency reserve. Although still a tiny percentage, more global trade is being carried out with other currencies like the Chinese yen or euros and even gold and crypto. A shift away from US dollars would weaken the USA's grip over global markets, causing a seismic impact on geopolitics. History has given us warnings of the dangers of hyperinflation. In Weimar Germany, people had to move cash with wheelbarrows just to buy bread. Some people even burnt piles of cash instead of firewood to keep warm. In modern times, Venezuela's story is often quoted as a cautionary tale. Its dependence on oil money and excessive government spending led to hyperinflation. Venezuela went from being the richest country in South America to the second poorest. 82% of the population now live in poverty. Now you might be thinking, surely this guy's exaggerating, right? The USA is too big to fail. There's no way a US debt default could happen. I hate to burst your bubble, but the US government only has two possible solutions, neither of which are pretty. The first option, print more money and pay off the debt. I don't think I need to explain why this would be a terrible idea. Not even Trump would be that stupid.
Did you use the word smart?
Or option two, austerity. Cut government spending and increase taxes. This would also be very unpopular. No politician would dare to ever call for such a thing lest they lose their seat in Congress. Even Trump's latest big, beautiful bill is expected to add to the debt by at least $3.3 trillion through to the end of 2034. The $37 trillion debt looming over the United States is not just a number. It's a ticking time bomb with global consequences. For decades, the strength of the U.S. economy rested not on gold or oil, but on something far more fragile: trust. But trust, once lost, is near impossible to regain. As the cracks in the foundation of America's financial credibility widen, the world watches with growing anxiety. The sell-off of U.S. bonds, the flight from the dollar, and the geopolitical tremors caused by the fickle Trump are not just signals of an economic shift. They are warnings of a potential collapse of the very system that has propped up the global economy since the end of World War II. What happens when the world no longer trusts the dollar? If we continue down this path of reckless borrowing and political dysfunction, the question will no longer be if the U.S. defaults, but when and what comes next. This is no longer a matter of political ideology or economic theory. It is a test of will and courage, which unfortunately not a single politician on the face of the planet is brave enough to attempt. The clock is ticking. Thank you for watching. Please leave a like and subscribe. We hope you enjoyed this video, and we'll catch you next time.